Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today I'm pleased that we have Jason Ayres with us. Jason is the founder and president of OptionSource.net, and OptionSource.net is a leading educator of options, where he talks about the various option strategies with his students, and he tries to explore all the different opportunities that are out there. And also, of course, considers risk and reward. So today we'll be talking about credit spreads, and trading these credit spreads, of course, gives you the ability to limit your risk. So I want to, again, introduce Jason Ayres, founder and president of OptionSource.net. Jace, great to have you with us.
Steve, you always make me feel so good when I'm a guest here. I'm getting a swelled head here. But thanks very much for the kind words, and always a pleasure to be working with you guys. No question about it.
Thanks again for coming.
What's that, sorry?
I said thanks again for joining us. Really appreciate it. I'm really looking forward to the presentation.
Absolutely. So I guess if you want me to get started, we'll just get underway. I see that you've already made me a presenter. So ultimately, what I need to do is just go in and share my application here. So if folks would be just give me a couple of seconds while I get that sorted out, we will get started very quickly here. So just maybe even a confirmation, Steve, that everybody's able to see the slides that I've created here that we've switched over, and I'm now in control, and then I'll just start moving forward from there.
Perfect. Looks great, Jason. Thanks.
Good stuff. Well, Steve mentioned we're looking at really the appropriate selection of strike prices for ISE FX option credit spreads. And so there was a question earlier on, will we be talking about FX options? And absolutely, we're going to take a look at a couple of examples here this evening, utilizing the principles that we're going to discuss, with a focus, of course, on a couple of the pair values that trade at the ISE. Now, as always, when we're doing any of these little education sessions, we just want to let everybody know that there, of course, are always risks to consider when looking to trade any of these markets, regardless of whether it's options, futures, currencies, and that you want to make sure that you understand those risks. Now, of course, when it comes to understanding the characteristics and risks of standardized options, you can always contact 888 Options or check out the website, www.888options.com. So, of course, the strategies that we're going to discuss here this evening, while they are relevant to what's happening over the last couple of days, are really meant for education and not so much as a recommendation. So hopefully everybody understands that. So as we move forward here, just a couple of little comments about the ISE FX options and series of pairs that you can trade ISE FX options on. The ISE has done a really great job of moving this particular type of trading vehicle forward over the last couple of years. When I first started working with them, there was only a few available, and as you can see now with the chart here, they ultimately have a number of pairs. Now, of course, we have our more popular ones: the euro, the yen, the pound, the Canadian dollar, all of the ones that are favorites. But over the last year or so, we've got the Mexican peso, the New Zealand dollar, the krona, and such. So you can essentially trade your views on the U.S. dollar's direction against most of the major currencies available. Now, the nice thing about this options market, the FX options market, is that it's accessible through most of your standard options brokers. So if you have a broker that you're trading with and you have an an account that's options eligible, then you should be able to access these various pairs. Now, again, they trade on the ISE exchange and are effectively traded through that exchange, cash settled in U.S. dollars, which means that when we are implementing a trade, whether it's a directional bias or a credit spread, which we're going to be talking about here tonight, we're actually not seeing the position settled in a foreign currency. We're actually seeing the position settled in U.S. dollars. So recognize that these pair values are basically we trade based on a notional index, and so there are no shares that exchange hands. We're simply trading options that are valued based on a notional index. And of course, European style exercise, which means that again, there's no early exercise with respect to these option contracts because there's no underlying security to exchange hands. Now, the nice thing that I find about these FX options is that other than your traditional covered call strategy, which involves owning shares in the underlying security, you can trade essentially any of the more popular and effective option strategies that are available. And what's nice about that is when we run our educational program, obviously here in Toronto, we have many people that are interested in learning the dynamics of the currencies market and are interested in trading spot market currencies. Well, what I say is a nice accent to that is you may enjoy, taking a directional bias on a day-to-day basis with respect to your the spot market currency. But the nice thing about implementing and bringing in these FX options in your portfolio as well is you could step back and take a bigger picture outlook on the particular pair value and take advantage of that with a limited and identifiable risk exposure. You can also look at, as we will this evening, in taking an outlook on a particular pair value and generating income through the use of credit spreads based on your outlook. So very flexible market with a lot of really neat strategies that you can apply. And of course, tonight what we want to focus on is the idea of utilizing your credit spreads. So moving forward here, couple of things just before we get right into it. Every week you can find at the www.fxoptions.com our ISE FX Options Weekly Outlook. And what we do on a weekly basis, and we try to have this out for first thing Monday morning, is we provide a technical overview of the major FX options pair values. And we simply take some of our very basic techniques and determine the probability of a direction. So we identify key support and resistance levels, and we really sort of try to put together in a very quick synopsis just some of the technical attributes within the chart that are suggesting to be aware and to be cautious of certain things happening. And what's important is, and the one thing that we always, of course, reinforce is that as a trader, as somebody who's looking to take a decisive position in the markets, in any markets, regardless of whether it's using FX options, we always want to keep an open mind. So the idea is that we want to establish, support and resistance levels. We want to establish a directional bias, but always recognize that there is a probability. We're always trying to put probabilities on our side, but that means that there's always the risk that we're going to be wrong. So we have to be prepared to essentially assess the charts and keep an open mind as far as the direction goes. And why I think that these particular this particular weekly outlook is going to be handy for those of you that are interested in implementing credit spreads is because I believe that we do a very good job at identifying very important support and resistance levels in these key pairs. And you're going to find out as we move forward that it's these key support and resistance levels that we're looking at to effectively make the decision as to which may be the most appropriate strike prices to sell to participate in a credit spread type strategy.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.